You all got to listen to what she has to say.
Happening is so much worse. So I went down the rabbit hole today, and let me give you guys some backstory. 2004 to 2006, people stopped being able to afford their mortgage payments. Why? Because there was shitty fucking loan products available to consumers, and loan officers were not regulated. That's where the Dodd-Frank Act and SAFE Act came in, which seemed like it was going to do a lot of good, and it did a lot of good. There's a lot of regulation in place that prevents me as a loan officer from fucking over a consumer, and there should be. Another piece to this, though. You guys need to go watch the movie The Big Short. So 2004 to
You haven't seen
2006,
the
people
movie?
stopped
Go
being able
watch
to
it.
afford the mortgage payments. 2008, the housing crisis happened. 2010, we got Dodd-Franked, which caused the SAFE Act. But what also happened at that same time was the big things that tranches these gigantic, massive pools of mortgage-backed securities, which are just gigantic buckets of mortgages, right? These are the mortgages themselves that are being bought by investors. They get put into a mortgage-backed security. That mortgage-backed security gets put into a bigger bucket, which is called a tranche. Lots of fucking loans, guys, okay? I need you to understand there's a shit ton of loans in this gigantic bucket.
A
All of
lot.
different varying credit risks. You have various credit risks inside this massive pool of loans.
A lot of
Okay? People
subsidized
started betting
mortgages.
against that. That was another big thing with the economy. I don't know if you guys all know about that. The investors, Goldman Sachs, they all started taking out insurance bets against the American economy because they started to see that these mortgage pools were failing. So people not only lost their homes because of these shitty fucking mortgage products, but then their retirement accounts, which were based off of mortgage-backed securities, along with private equity being able to bet and buy and insure debts against each other, consumers lost everything.
Yep.
The investment companies didn't. The one thing that went away for 3 years in 2010 was the mortgage-backed security betting game, right? They were called collateralized debt obligations, a CDO. They came back in 2013, and I found out about that today. I didn't know that those were a thing. I feel really dirty being in this industry, knowing that this is still happening. I'm regulated. I follow the rules. But in 2013, they brought back CDOs, and they named them something new. Into the new and improved CRT, credit risk transfer, credit default swap, synthetic risk transfer, they're the same thing. This is funny
Here's
money
an
being bet
example of it
against
right here.
Americans' mortgages to see whether or not they're going to fail. Guess who's going to be able to start taking the bets on that real soon? As of right now, credit risk transfers are limited access to a certain number of types of investors. Typically, they are going to retirement accounts, 401ks. However, we have a lot of people in the American economy that don't have those programs available where they work. They don't have 401ks to buy into these mortgage-backed securities, and there's people still buying homes because there's more people than there is houses. That's the part where this gets a whole lot fucking worse, guys. Private equity is about to start buying into mortgage-backed securities to free up
Yep.
finances so more people can buy homes. Not that y'all can really fucking afford it. Signed your loan officer. Holy shit. This is bad.
Very
This
bad.
is really bad. It's probably preventable. We're gonna have to elect some new people really fucking quick, but otherwise, we're gonna have private equity buying your actual fucking security interest in your mortgage. Not even your house. They're buying your security interest. For fuck's sake. Because I can't watch this happen. This is gonna be a train wreck. Like, this is from the Federal Housing Finance Agency, which is the CRT progress report of the number of single-family mortgages and the activity in 2022 and 2021. Now, a lot more people bought homes in 2022 and 2021, but the way I am generally understanding this is we also have other legislation and other things that are going on that are about to put a lot of pressure on the banking sector, so they are going to be forced to sell CRTs to private equity. Don't know what the Basel III endgame is, you need to go look that up. That is something that is being fought by lobbyists. That is, surprisingly, Congress,
Basel
like
III
all of the
Endgame.
politicians that I have seen so far seem to be in support of that. There's some that are no, some that are yes, but a lot of regulators are trying to push that through. That is a global initiative with the Swiss banking folks over there to make banks have more assets on hand. Right now, banks don't have enough assets according to all of the regulatory, like, global regulatory authorities that are saying banks don't have enough in their accounts. Basel III endgame is what's getting pushed. Lobbyists are pushing against it. Private equity is going to wind up having to buy mortgage-backed securities. Holy shit.
And what the funny thing is, a lot of people don't realize is that their retirements and their pensions and 401ks, they don't realize what they're invested in. And once these private equities were to come in, it's definitely going to cause a domino effect throughout the whole entire financial market. So this is why it's so important to know what you hold. Let's go.